Welcome to Profiletraders. This is Reza and thank you for listening to my market analysis for May the 8th. I was gone for a while taking care of my mom, which is aging and has been a little bit sick, and finally I'm back to business. So let's look at a little bit at the big picture of what is going on in here. And we are going to start by looking at ES. As we can see on a daily chart here, market is without a doubt in a very big stage of undecided condition where we have rough time clearing above 2100. At the same time also we have no desire to correct. As a result, we have seen this back and forth, up and down, kind of random condition which doesn't make things easy. Now, we have the ability, based on what is happening here, to be able to forecast a couple of upside objectives. Number one, we're going to draw a trend line here, framing the short-term trend line. And at the same time I can go ahead and put a parallel trend line at the top here and come up with a target on the upside anywhere between 2125 to 2130. It is not at all unusual or abnormal to see the price coming towards retesting this top at all, because usually when market starts a correction, for example in here, it likes to make slightly a higher high, and then when it sucks in the new buyers that come in at record all-time high, then it stops and then turns back down. And as we can see here, we really do not have a significant higher high above this 2108, 2110 that we have seen tested several times. So I would like to see price pop one time above this current high, and then after that fail and then give us a reversal down. But for right now, it's very possible that we are going to go for a touch of that resistance line up there between 2125 to 2130. I can also draw another trend line, or I should say another resistance line, which would hook these two tops here, and that would give us an upside objective of roughly around 2145 to 2150. So once we're gonna reach anywhere between 2130 to 2150, we should start to see significant resistance coming in. Now Friday we got the unemployment numbers that came out at a 5.4%, but you have to take into account that almost 100 million people, yes, you heard me right, 100 million people are out of the job market. So obviously if you start to put a lot of people out of the job market, unemployment drops. But the 5.4% that you are seeing is absolutely not reflection of a healthy and a good economy, because let's not forget that we are barely growing at all. Our rate of growth is somewhere between, I would say, 1 to 1.5% at best, and I have very seldom see an economy growing at a 1 and a 1.5% and having an unemployment number of 5.4%. It's all accounting phony baloney that they are putting in front of people to cool them down and make them believe that things are fine. But things are not fine. If you dig into the numbers and see the details of the job market, is actually not good at all. But Market liked it Friday, and you cannot argue with the fact that it is absolutely a very resilient market. So 2130 to 2150 should start to encounter significant resistance for ES. Now when we look at the profile chart of ES, we have now a very nice P-shaped looking profile, and all the level below 21, all the level between 2106 to 2091, this area is definitely in need of being tested and traded through, because price moved up too fast through this area, making it very susceptible for a retracement down to 2091. But for this to happen, we must break 2106 first. If we do break 2106 Sunday or Monday, then we are susceptible to come down all the way first to 2095 and then 2091, and we have a POC down there at 2086.75. And on the upside, you already know the upside objectives that we looked at on a daily chart. Now let's bring a little chart of crude oil and see what's going on over there. Again, let's look at a daily chart. One more thing that I forgot to mention here on a daily chart of ES, also look the very bearish divergence that we have as we are again back to the all-time high. Look at how the volume down there is not at all following, which is telling me that this retest of the high looks more like a manipulation than real true enthusiastic buying by the general public. If it was real enthusiastic buying taking place, we would see volume also following price, which is absolutely not the case in here. So this is also a very troublesome, problematic condition that we have. Now for crude, I remember extremely well when price was at around 44, 45 down here. Goldman Sachs came out and had a projection for, I believe, $30 something, and almost immediately after that announcement we have seen now a rally going from 46 to 62. What a coincidence, huh? At the very low they come and issue extreme bearish projections after it has already dropped from $104 to this $44, $45, and then down there they come and tell you that it should go to 30. Sure enough, since it was so oversold, we saw a very large rally that took place. Now, can we say that because of this rally, conditions have changed into bullish for oil? Absolutely not. You always have to take into account when you have such a dramatic leg of a drop, such as this one down here, it's normal that if you get some kind of a retracement of this leg, since the drop was so large that the retracement could be 10 points, 15 points, or even 20 points. But it has not at all done anything that is super bullish to me. We are now, without a doubt, near significant resistance. And as we can see on the volume side, we have heavy selling coming in. We can obviously draw a trend line here that would seal the short-term uptrend, and to me this trend line that we have in place is a little bit too steep to be sustainable, and I would not be surprised at all that sooner than later price will return back down towards 55 area. Now once we get towards 55 to 50 area, it should become again an attractive buy. There is no question that we are building a very strong bottom here. I do not foresee at all price breaking below the recent lows that we have in place. So if anything, this could be considered as your leg one of a short covering rally. Now we should see another test of this current leg up. Then if our retest holds anywhere between 50 to 55, from there on I see then another rise back up to test the current high that we have in place, roughly around $63. Fundamentally, nothing has really changed. All the economies around the globe, China, South America, Europe, have not picked up in pace. Demand for crude has really not increased drastically due to economic activities. Obviously, the geopolitical tensions in the Middle East are always a factor that we have to take into account when trading crude. But over there, really nothing has changed except the fact that we are getting closer and closer and closer to get a conclusion regarding that deal, that ridiculous deal that the US is trying to shove into our throat with Iran. If that goes down the tube, which has a great chance, then one must see what kind of implication it will have for the region, and obviously it should also have implication for crude. So from here, I do not see much of an upside potential left in crude, because we have already seen a very nice rally between 45, 46 to 62, and I do see that any retest of the current highs should be a very good sell opportunity. Our first level of resistance is at 60.10. If we cross through 60.10, then most likely we are going to go for a 61 retest, at which point I believe 61 will be a fantastic sell. On the way down, obviously 58, 35 to 58 area is very strong support. We break that, then I believe we should go down for a test of 55 to 53, at which point we should encounter significant support. So right now, as it is, we are in a bracketed market. For a break on the upside, we need to clear 60, and for a break to the downside, we need to clear 58. And above 60, I'm looking for 61. Below 58, I'm looking for 55. Now, let's look at gold as well, which is, in my opinion, as it is, the most destructive, the most vicious, the most random, and the most nasty instrument that there is out there to trade. And this condition of randomness, where pretty much there is no pattern here, it's up, down, down, up, down, up, non-stop chaos. We can see it very clearly in the daily chart. Again, you are in a big bracket, big one. The best bet is to avoid the bottom or the middle of this bracket, and the best thing would be to sell when it gets close to the top part of the bracket of 1225, and buy it when it gets towards that zone of 1150 to 1160. As long as it's inside or the middle of this bracket, you can tell. Very vicious. I should say myself, I have decided I do not trade gold at all under such condition. It is too difficult, it is too rich, and it is very, very, very probable to lose money than to make money when market is in such a nasty random condition. So again, this was Reza with Profiletraders. If you wish to learn market profile, you can get all my courses and 1-year membership to my trading room for $550 from my website profiletraders.com. Thank you for listening and wish you an excellent week next week.